Have you ever wondered about the different types of investments and their returns? It's a question that often pops up, especially when you're aiming to grow your wealth. Investments are like seeds. You plant them today, tend to them, and over time, they blossom into a fruitful tree. The beauty of investments is they work for you, multiplying your capital without the need for your constant attention. But not all seeds are created equal. Some may sprout quickly, offering fast returns, while others mature slowly, providing steady growth. Just as a gardener needs to understand his seeds to cultivate a lush garden, an investor must comprehend the various types of investments to build a prosperous portfolio. Understanding returns, the rewards of your investment, is crucial. It's like knowing the fruit each seed will bear. So let's dive in and explore the 7 types of investments, starting from the least profitable to the most profitable. Starting off our list, we have savings accounts. A savings account is a tried and true method of stashing your money. It's the financial equivalent of keeping your money under the mattress, only safer and a tad bit more productive. Offered by a variety of financial institutions, these accounts provide a safe haven for your hard-earned cash. They're insured by the government, so even if the bank goes bust, your money doesn't. It's also highly liquid, meaning you can withdraw your funds at any time. However, as with all things, there's a trade-off. The safety of a savings account comes with relatively low returns. While you'll earn some interest, it's often barely enough to keep up with inflation. So, while your money is safe and accessible, it's not exactly growing at a rapid pace. The safety of a savings account comes at the cost of lower returns. Moving up the ladder, we find bonds. Bonds, in simplest terms, are loans that you give to a company or the government in exchange for periodic interest payments and the return of the principal amount at a predetermined date. They are a step up from savings accounts in terms of potential returns. One of the key benefits of bonds is their relative safety. When investing in bonds, you know exactly what your return will be, provided the issuer doesn't default. This makes them a popular choice among investors seeking stability. Another advantage of bonds is the regular income they provide. Most bonds pay interest semi-annually, which can be a reliable source of income, particularly for retirees. Despite their relative safety, bonds can offer higher returns than savings accounts, especially corporate bonds which carry higher risk, but offer higher interest rates. Thus, bonds offer a good balance of safety and returns. Next on our list are mutual funds. Picture this: a banquet of investments, where your plate is filled with a variety of financial instruments, stocks, bonds, and other assets. That's what a mutual fund is, a financial smorgasbord, but you're not alone at this feast. Mutual funds operate on a pool of money from multiple investors, allowing you to enjoy the benefits of diversification. That's right, instead of betting on a single stock, you're spreading your investments across a broad spectrum. But the best part? You've got a professional fund manager at the helm, making informed decisions on where to invest that pool of money. They're the seasoned chefs at this financial banquet. This professional management, coupled with diversification, often leads to higher returns than bonds. But remember, the greater the reward, the greater the risk. Mutual funds can offer higher returns, but they also come with higher risks. Now, let's talk about real estate, an investment as old as the concept of property itself. Real estate investing is all about buying, managing, renting, or selling properties for profit. The benefits are numerous. These investments can offer high returns and steady cash flow from rental income. Plus, there are tax advantages like deductions and credits that can significantly boost your bottom line. But remember, no investment comes without risks. Real estate is no different. It requires a substantial initial investment, and borrowing costs can be high. There's also market volatility to consider. The value of properties can fluctuate, influenced by factors such as location, market trends, and economic conditions. And let's not forget, managing properties can be time-consuming and challenging. So while real estate can offer great returns, it also demands careful planning, research, and management. Real estate can be a lucrative investment, but it also requires a significant commitment. Moving further up the profitability scale, we find stocks. Stocks represent a slice of ownership in a company. When you buy a stock, you're buying a piece of that company's future profits. The value of stocks can fluctuate greatly, which means they can provide high returns, but they also come with high risks. Stocks are generally more volatile than bonds or savings accounts, so while the potential for profit is higher, so too is the potential for loss. However, the beauty of stocks lies in their potential for long-term growth. Over time, the stock market as a whole has consistently risen in value, despite short-term downturns. Moreover, owning stocks gives investors the right to vote at shareholder meetings and receive dividends, which are a portion of the company's profits distributed to shareholders. To summarize, stocks can offer a lucrative investment opportunity, but they also require a higher risk tolerance. Stocks can provide high returns, but they also come with high risks. Finally, at the top of our list, we have cryptocurrencies, a phenomenon of the digital age. Cryptocurrencies are digital or virtual currencies that use cryptography for security. They exist only online and are not regulated by any centralized authority. This decentralized nature is one of the biggest draws for many investors, offering a level of freedom and privacy not typically found in traditional investment avenues. But what really gets people talking is the potential for extremely high returns. With stories of overnight millionaires and astronomical growth rates, cryptocurrencies like Bitcoin and Ethereum have captured the world's attention. But remember, where there is great reward, there also lies great risk. The volatile nature of these digital assets means prices can swing wildly in short periods of time. Cryptocurrencies can provide extremely high returns, but they also come with extreme risks. And as always, it's crucial to do your own research before diving into this exciting yet unpredictable world of digital currencies. So, there you have it, the 7 types of investments ranked by profitability. We started with savings accounts, the safest but least profitable choice, then moved on to bonds, a step up in both risk and potential return. Next, we discussed mutual funds, a great way for beginners to diversify their portfolio. We then delved into the world of real estate, offering solid returns and a tangible asset. Stocks, while they can be volatile, offer high returns for those willing to ride out the market's ups and downs. Finally, we explored the frontier of cryptocurrencies, where the risk is high, but the potential for profit is astronomical. Each of these investment types offers its own unique balance between risk and return. It's all about finding the right fit for your financial goals, risk tolerance, and investment horizon. Remember, choosing the right investment depends on your financial goals, risk tolerance, and investment horizon. Always do your own research before making any investment decisions.